We've spoken to a number of companies, liners that own these big ships and send them around the world, and it's really good to get your perspective from the companies that pay for space on those ships and have to pay increasingly large amounts. How would you characterise the level of disruption that you're seeing, that your members are seeing at this point?
Yes, good morning. Well, I think this is one of the biggest disruptions that we've seen in maritime shipping since, for a very long time, tens of years, because this has been going on for really over a year now. It started all with Chinese New Year in 2020, when the Chinese ports were congested and production facilities in China were closed. And it was basically the start of a development in which we've seen capacity shortages, container shortages, rates soaring, service declining, and reliability really dropping below what is expected of the market. So that's a very difficult situation for all those companies, ranging from multinational to SMEs. We're very dependent on maritime shipping to basically send their goods around the world.
Yes, and we've been showing these charts of what it costs to ship from Shanghai to LA, or more interestingly, perhaps from a European perspective, and in terms of the size of the change in price, the Shanghai to Rotterdam route. We've been looking at what it costs to put products on a 40-foot container. How concerned are you about consolidation within the liner industry? These shipping lines, 10 to 12 of them, controlling 85% of the market, but then they have alliances within that. I wonder how concerned you are. Should we be concerned? Should your members be concerned about that?
Yes, well, we're very concerned, and we've already been that for a couple of years, and not only from a European perspective, but we also work together with our Global Shippers Alliance, so with also American and Asian shippers on this issue. Because, yes, the market has been very consolidated, and basically there's an oligopoly situation going on right now, but there's no real regulation. So we as a customer are not very much protected in this market where there's a very dominant position in the carrier's position. And we've been saying already for years to the European Commission on, for instance, the block exemption regulations, which gives carriers the possibility to discuss sharing capacity and putting capacity on certain trade lanes. They get a sort of a waiver on competition law that is a wrong instrument. And the European Commission decided to extend it last year, straight before the pandemic started. And we always knew a situation like this would eventually come into the market, and that's why we are also calling on looking at more ways to protect the customer, which is of course shippers or cargo owners, just as we've seen in other markets which are basically an oligopoly, like aviation or rail transport, or even the electricity or telecom market. So that's basically what we should be moving to basically get a little bit more balance of power in that maritime supply chain.
Because the liners, we've spoken to some of them, certainly suggest that their alliances is like the airline industry, and they try to sort of make it seem that's how they describe it. You say it's a sort of a competition law exemption. Do you get any sense that regulators want to change this at all, Rogier?
I think there's a difference worldwide. You see, for instance, in the United States, the Federal Maritime Commission really stepping up. They've already started an investigation on the tension and demurrage costs, really concerned on what is happening there for shippers and agricultural producers. We've seen Korean authorities stepping up, Chinese authorities. I think in Europe we're lagging a little bit behind in the discussion, but it's also because I think from a European perspective, we would rather much more look at a structural dialogue with all the maritime supply chain partners to see what can we do to fix this issue. How can we help one another? We're not looking at a big legal fight on this issue. We just want to have this problem solved. And for that, we need all the parties at the table. And currently, the carriers are really missing in this discussion. And they have been doing that for a couple of years. And that's a little bit of our concern, because we have the idea that they're actually a little bit comfortable with the situation that they're in. They've been making record profits in 2020, but it's our members that are paying the bill and that are suffering. And in that position, they, of course, the shareholders and the executives of the liners would be satisfied with this situation, but they have a responsibility to make sure that we get this conundrum that we're in fixed as soon as possible.
I wonder how inflationary this ends up being, Rogier, in terms of your members, how much of this cost they have to pass on to end consumers. Is that something that you've been thinking about?
No, well, basically, I think the impact is different in a way that, for multinationals who send a lot of containers around the world, they have some room to absorb all those costs, but that's really running into the millions right now because we've been stuck in this for over a year now. But especially problematic is for the SMEs, so the small medium enterprises. They have no ways of negotiating with those big liners. There's no transparency, there's no communication. So basically, they have no idea when their cargo will arrive. And if you look, for instance, at the retail sector in Europe, a lot of shops have been in lockdown. We're looking at spring, summer, shops will be opening up, but some of them don't know if they'll get their supply. So they end up opening companies, opening shops, but with empty shelves. And that is, of course, not a situation that we want recovering from this pandemic. So, they may have survived the pandemic, but if they open up and they have no supply to sell to consumers, the economic situation might be even worse.